Hi all. As you'll have noticed, the markets have changed a little bit of late. They kind of thinned out. They've been quite rapid, moving around a lot. And for a lot of the guys, especially the guys that are first using Jigsaw for the first time, they're probably in shock at what they're seeing on the ES right now. So I did promise I'd do some videos. A lot of people have asked if I'd do some videos. It is the rollover day today, Friday. So what I've done is I've done a short video today, a couple of trades, but also just to talk conceptually about some of the things that you might be looking for. Like, for instance, there's not really a lot of iceberg orders right now in the market, and the iceberg orders that do come, they're tending to slip through. Market is thinner, the market is more slippery, but also the market is tending to run like 7 or 8 ticks one way, and then the move fades away, and then it runs 7 or 8 ticks the other way. So basically what I'm planning to do is some videos to show that phenomena as well as actually trading it. Now, I'm not going to trade off any trade location, so I'm not going to trade the way I trade, but I'm not going to sim trade it. So this is just kind of an experiment. It's not the way I trade. I trade off trade locations, and I'm looking for certain things a lot more backup than this. But this is basically just doing some scalping to kind of show more about, okay, this is what the market looks like when it's about to run out of steam and turn the other way. Now, as I mentioned later as well, you can't really do that, or I can't really do that with a sim account, because it won't show the impact of an illiquid market not hanging around long enough to give you a fill. So it's great to be right. It's great to be, I think that's going to turn there, but it's a different thing capitalizing on it. So I'm going to be doing live trading with it. The objective isn't really to make a ton of money with it. It's just to kind of say, okay, forget trade location, forget everything else. Just think a little bit about how it's moving and when the momentum's fading, and basically just getting in the market and then trying to manage that a little bit. So that's what I'm going to be doing. This is a quick video today. I'm going to do some more next week. Please give me some feedback. If there's something I need to do differently for the next video, please let me know. And so we'll get into it. Thanks. Okay, so we're just getting ready for the open. So again, the idea is to ignore any price levels. This isn't about the way I trade. It's just about trying to read the kind of swings, like 5 or 6 or 7 or 8 tick swings that you get in one way, and trying to gauge momentum. So as the market opens, probably nothing off the open, and then just looking to get a feel for the momentum, trying to stay on side in the overall momentum if the market's trending, and then wait for the market to come back and kind of just die out, and then we'll be taking a trade and fading that. So it's not the way I'd usually trade. I'd usually wait for something like that to happen in a particular trade location. So not looking particularly to make money here, but we're going to have to do it with live trades, because you need to see the impact of a less liquid market, with these 300s here instead of the thousands that we're used to, on the ability to get a fill. Because obviously, if you're doing sim trading, a lot of the time you're going to get a fill. You're going to be reported a fill, and that's not always realistic. So I think you need to do an experiment like this. I think you should probably do it with sim first, but to kind of really get a good feel for it, you need to experience being right and not getting filled a number of times. And of course, you don't want to be in shock when all the winning trades that you would have placed in the market end up trades that never get filled. So here we are. Can we see platform's having a bit of a lag there? We're on IQ feed here. It's probably not going to be a permanent lag for today. We're just kicking off the opening trades. So Nasdaq pushes up, Dow pushes down, ES in the middle. If you get the Nasdaq going up and the Dow moving down, yeah, sometimes the ES follows one of them, but usually it's kind of chop on the ES. Excuse my cough. Okay, so the Nasdaq moved up a little bit more. The Dow I'm going to recenter. It's always good to recenter, especially when you get into a trade. Okay, so we can see Bonds not doing much. Euro not doing much either. And now we've got pushed down. It's quite frantic here, so not in a hurry to do much. So right now we're below the open. So we want to trade. This got 212.75. It's an interesting area. What we've seen a lot lately is very shallow pullbacks. I'm not really a big fan of taking shallow pullbacks. So we had a few trade at 13 there, and now nobody wants to hit 13. So let's just see. Okay, now they hit it. Okay, now they hit 13.25. So just 16 hit 13.25. Not ready to short it yet, but this is the kind of thing you're looking for coming up, and you want to see them again. Second time round they hit it, so that's not what you want to see. So there are going to be a lot of trades you miss, basically, because you want to be patient, wait for it to come back, and actually wait for it to hit your price. Now if we look over on the tape, see lots and lots of green. We can see red and green up here about equal, and if we just reset that now. Okay, so now we'll be looking, as long as we'll be looking to stay above the open price. So I want to push up. So now ideally, coming back to here, see if we can get a fade. I mean, what's been happening, in the past few weeks, quite often, you'll get this and I'll be ideally positioned to fade this, and for a long, and it'll just go straight through to the bottom. So you have to be a bit cautious. Okay, so came down here. See the volume, just 306 there. Just see what it doesn't come down again. It doesn't want to come down to 1475. It's coming down, and each time it's coming down a little bit less. Again, no real opportunity to get on unless you're really, really aggressive. A few big buyers coming in. Nasdaq and the Dow still fine. Okay, so the last pullback was 5 ticks. So we might have to kind of look for a shallower pullback. Obviously, the moment you do that, it could quite easily take a big pullback. So again, it's up to you if you want to take these very shallow pulls. We're just looking to scalp some trades here to not take a lot of risk. First 15 minutes, don't really have to trade. Just get a feel for it. Okay, 54 traded down here. Normally you could wait for the offers to pull, see that and wait for the offers to pull and just kind of hit in after that. But the problem is with the liquidity so low, when they see the offers pulling, it's already gone up by the time you see the offers pulling. Now let's see if he comes back down there and does the same thing again. So we're looking at probably entering 16.15. Tick down, we tick down to 16. We really want to be able to just get it to tick down there and then hit into this bid here. Okay, just see what they're doing. Okay, so now they've ticked through it. So, okay, so just being patient, just stalking it. They've only moved 6 points, not a bad mover. Definitely some upward momentum. But again, first 5 minutes is going to be a bit fast and frantic. Want it really to slow down a little bit. There is no hurry to get on a trade, because what you don't want to do, you don't want to buy 1975 and then find out that that's the top. Very easy to do that, to buy the top. Okay, so we're going to come down to, so 19, so look at 19. Okay, we don't want to see, okay, let's try that. Okay, now we're just getting in because basically we saw them pop down and kind of keep popping up. Plus, we've got, so just let me focus on this. We've not got them hitting into 1875. Okay, we just need a bit of a, we need to widen that actually, because if it gets through the top, it'll pop out. I want to take advantage of that. Okay, it'll pop out. There you go. So we'd expect it to pop. Again, just trying to scalp a little bit. But basically, we saw as it came down, we saw what we've seen a lot of times. It kind of just came to a price, didn't trade a lot there. So we're not really looking at trade locations. We've not done any analysis. We're just looking for the fade. Now we've got, I mean, when I say not looking at trade locations, I mean longer term trade locations. We've obviously got this area developing here in the volume profile. Still, the only thing we'd really be looking at right now is a long. If I bring across the nicey tick, you can just see it's been mostly short, and quite a lot earlier on. So if the stocks are going down, but the futures are all going up, that's always interesting. But the market's rolling right now. So and of course at the top when we got out, basically I was expecting as it went through the high to have more of a push on that initial push. As you know, we've got some of these guys, some of the short stopping out. We didn't get it there, so immediately just scalping, just took it when the momentum waned. And again, we've not had much of a push up, so to go along again, I want to see more of a push up and then fall back down. So this kind of thing, to me, is not a good trade. A good trade would be 2019, which would be quite a big pull back. It's still kind of building volume here. Might be that some people are trying to fade this. Stocks are just about to go positive. Bonds are moving down, which is good. No, we all know the ES. We all know the ES can swing in one direction and then just turn around and swing back in the other. So always a bit wary, basically, when it can't escape the volume. And obviously, if it comes under 2019, that's basically where I think there'll be some longs trapped and getting out below there. So that's where I think up here I wouldn't say the market's turned around. Even we could like reset this. I wouldn't say the market's turned around up here. You don't know. For me, I don't know the market's turned around until this breaks. So if this holds, there's no trade on. Just seeing Jacob on the Jigsaw chat. Crazy market now trading for me. Good boy Jacob, I'm going to write. Jacob likes to trade. That's a terrible affliction. Okay, so what we can do here, we can see the markets are moving sideways, and if we center them, we're at the middle of the range. Center the markets. See if you can get an idea. I mean, if they do, obviously they could change right now. But you see the Dow's up, Dow's down, Nasdaq was up then. You'll start to get a feel when it does start to range, everything will mill around. Everything will mill around. Everything will be at its center point. Obviously now we've got the down there, Nasdaq pushing down. So that would be, if you're looking for this to break out, that would be exactly what you want to see. If you're a range trader, you want to see those kind of recover like that, and then maybe you try and buy into, try and get a buy at 1925 or something. They're coming off a little bit again. There's a bit of tussle there. You see that's millionaire spinning around there, having a bit of a battle over that. Okay, so it's a range, but it's not really giving you much either. So you got to look at this and say, well, there's not really a lot on, is there? I mean, you could get like I say, 1925, I think it was, we said, or 19. You probably still get the top of the range, but you know, basically what you'd be doing, you wouldn't be really taking a fade trade at that point. You're just playing the range. You're probably playing it without really using the order flow at the extremes. And what I want to try and do today is just give you an idea what it looks like when the momentum fades in a fairly thin market. And if we can do like 2 or 3 trades and just show you that, I'll kind of be happy. And it's the kind of thing you probably have to, probably with each trade, you'll probably need to replay it a couple of times. Okay, so there is not really much happening. Okay, doesn't look like we're threatening the top, but we could pop the top at any time. And again, you could think, okay, when am I going to fade this? Well, maybe you fade this when you see these start to pull out of the way and this starts to stack, and you see a big red bar, maybe like a red with 8 or 900 contracts there. That would be the time to short top of this range. Also, if you've got the Nasdaq and the Dow, right, the red there, you only had 100 or 200 in the red. You want a bigger number there with no red bar, and then you want it to go down a bit. Let me just snapshot fill times 50 already. Okay, so now we've had a push up. We can start there. Okay, we've had a push up through that, so that range now down here. It's not broken because we haven't really moved up much out of it. We didn't. It was a kind of a weak move up. We moved like 5 ticks up. That's not bad. Just not convinced here that continuation up's the right thing to do. Although we only hit 15 there at 21.75. Let's see what happens when we go back to 21.75. There's no shame in being right and not getting filled. Okay, 21.75 again. 5 trades, 6 trade. Okay, let's try that. Again, we're not going to give it. Okay. Fade. We need the buyers to step in. Okay, we need to try and work our way out of this trade. Try and get out. There we go. Okay, just lost a tick on that. Didn't like that. Okay, see the Dow and the Nasdaq coming down. Didn't like that at all, basically. I mean, it still might go up, but you know, for the kind of trading we're doing, it's like, oh, I don't really want to see that. I want to see it kind of pop up straight away. I want to see the sellers not hit it and then the buyers come and take control. So that's a good example, though. It's a good example of just getting in and also not panicking on the exit. You know, taking it on the chin for a tick, not trying to panicking out and losing 3 or 4. Because you're in a volatile environment, and if the market's volatile, it's going to spin around and let you in. And of course, there is a downside to that. It does sometimes, obviously, run against you instead of letting you out. But you know, you have to take advantage. You know, take advantage of the volatility. So anyway, I'm going to keep on talking. The Nasdaq and the Dow now going up. We hit 2021. So we lost a tick on there. We got in at 22. There, went down to 21 against us. Hasn't, from what I've seen, I don't think it's ticked up again. Ticked up in our favour since we got in. So quite happy with that trade. And starting to think about shorts basically. And the reason I'm clearing all this is because basically just for these kind of short-term fades, you don't really need an awful lot of history. Okay, so this was our entry price on the trade before, 22. Can't get through it. With a volatile market, you could, in theory, hang on and probably wait till it comes back up to 22.50 to get you out, but you just might be unlucky and be that one time where the volatility doesn't give you that opportunity. So what we've done effectively, it looks like we've kind of extended our range, but you know, we went up and extended the range a little bit. 2050 is as low as we've been. Again, that's the funny thing about scalping as well. You think there's going to be, I think there's a lot of image, and I'm sure there are guys. I mean, I've heard of guys doing like 250 trades a day, not round turns, but trades. And I kind of wonder how they do that. I'm really not sure what techniques they're using. But you know, scalping is still stalking trades. Well, there should be more than like a position day trader, but it's just something you can. Some days you'll get more than others, basically. You see 47 minutes in. I'm very aware for anybody who's still watching this that I'm kind of taking my time here. We've had 2 trades in 17 minutes. Okay, so is that range going to break? And is it just going to do here what it did at the top? It might just come down, was it 5 ticks pop? So 1, 2, 3, 4, 5, 1775 might extend the range to the bottom the same way you did at the top. You could, does look like that wants to hold, doesn't it? Well, yeah, Nasdaq's really pushing down. Yeah, Nasdaq's pushing down. Basically, don't go long. You know, don't take the risk. We could look to fade here. We could look to fade around here. We just popped up to 2020. Nobody wanted to hit it. We'd come up there again. No one hits it. You know, and then maybe wait for the bids to fall and then kind of whack into it. But again, I want to try and miss a few trades if I can, so you can see where we get. You know, the more right you are, sometimes the less likely to get an entry. So basically, we've come to the bottom. We've not wanted to trade underneath that. We hit 1850. We hit it to virtually nothing traded. So that's bad news for the bears, basically. They haven't been able to get through it. And basically, there's going to be shorts traps at the bottom now. So these guys that sold 1875, they're stuck. And we're going to see the result of them being stuck soon. So now we have to say, okay, well maybe we should be long biased. See if we can work on long. See, we got now. What you'd like to see now is actually some absorption coming down. Seeing one of the bidders step up and get some absorption. Seeing like 1,000 hit. Bidders, the sellers are still hitting the bids and getting movement down. It's a tricky one because basically, if 1875 breaks, it's going to really run against you quickly. So it's a risky trade at this point after so many times up and down. Okay, now we're through 2 contracts. Okay, let's see, we're getting through it. But again, we said maybe it's just going to poke through. So so we went up to 2025 before. Let's see how high we get now. So we want a short here, but the Nasdaq and the Dow are moving up. Slippery, slippery market. Okay, so back to the top. Are we going to fade? I'm going for a fade. The more times you hit the extremes of the range, obviously the more risky it is to fade. So the buyers have gone. It's going to be a bad short here, but I'd kind of want to get in a bit higher up, maybe 21, 25. Yep. See, the buyers just disappeared. We went up there, the buyers just kind of gave up. It might just come back. You could have, if you'd have got in at 21, might have gone down 3 ticks. Now for an exit, come back to 21. Scratch a trade. You know, that's the nature of the game basically with these kind of very short term trading. And there's nothing wrong with taking those either. It's just whether the effort of taking more trades actually gives you more ticks overall. And again, this isn't the way I trade, so my caution's obviously coming along with me. I should just borrow a couple of $1,000 off the wife one day and just hit everything and see what happens. But I don't think she'd let me. If it was a Gucci handbag, it would be fine. Okay, so we're gonna now what I might do, I'm gonna let this go for a little bit, but basically I think this just might be the roll that's doing this. We need to basically get out of this area if we're not going to fade it. Okay, you can see there's nobody hitting it up here, but here's the issue with taking a trade here. What you really want to see, you want the overall bias on your side, right? So for a range trade, the lower you are, the more bullish you are, and the higher you are, the more bearish you are. So that's your bias on a range trade, and we're on a range here. For a continuation trade, you need trending behavior effectively. And obviously you can see that on the chart, and you can see it on the volume profile with very thin trading and then a volume node, very thin trading, then a volume node, very thin trading, then a high volume node. Okay, and then what you want to see, the market move down towards your area. So if I'm long bias, you want to see the market move down, and you want that move down to be kind of average for the kind of rotations you're getting on that day. And you want it to be fairly sprightly, fairly like 300 or 400 down, 300 or 400 down, 200 or 300 down, 300 or 400 down, then 5, and then back up a couple of ticks, and then down to where it printed 5, and then 20, and up a couple of ticks. But you need that kind of momentum down towards your area for it to stop, because you're trying to gauge that shifting momentum. And what it's doing now, there's no momentum either side. So basically, because there's no momentum either side, you can't really judge it. And because there's no absorption, there's no icebergs there. There's nothing to really see. So what I'm going to do is I'm going to stop the recording. In terms of tick, I just don't think it's going to be good today. So I'm going to do another one of these next week. And what I'll do is I'll just show you the trades that we did, and what we've done. We got in at 2019, got out at 22.50, and then we took a loss 22.21.75. So what I'll do is I'll try and do another one of these next week when the market's running a bit better, because it's just going to be just me talking and no action. Anyway, thank you for watching. Cheers.